Hi everyone, what I'm going to have a look at now in this little session is the way depreciation can be asked in question 1. Alright, so there's a couple of things before we start off on that we probably should have a quick run through and make sure we're okay. So when you talk about depreciation in question 1, what I would look at here is I'd say, right, is it going to be straight line? Is it going to be reducing balance? Are they going to give me the months? Okay, so is my policy from the date of acquisition to the date of disposal? Or is it a full year's depreciation in the year of acquisition and none in the year of disposal? And then finally, are they going to give me the rate of depreciation or do I need to work it out? So for the rate of depreciation, remember the way you calculate that, it's the cost minus the scrap value. Now scrap value could also be called residual value, all over useful economic life. Okay, so just remember that when you're going through it, okay? So the cost is always 100% minus the scrap value all over the useful economic life. So let's take a look at a couple of these. So if we take a look on this question here, so it's from the 2024 paper. So delivery vans are to be written off on a straight line basis over 5 years, a full year's depreciation in the year of acquisition and none in the year of disposal. And they tell you that the delivery vans have a scrap value of 5%. So let's take that full working and see how we go about doing this. So we know it's a standard disposal working, but what we're really interested in now is making sure that we can deal with everything that comes up for it. So we want to make sure our depreciation is correct. So the cost of the delivery van is to be written off on a straight line basis, and it's over 5 years. So I'm going to highlight the key parts here. Over 5 years. So that's my useful economic life. Full year's depreciation in the year of acquisition and none in the year of disposal. But the other little piece that I want first is the scrap value of 5% of the original cost. Okay, so how do I get that rate of depreciation? I take my cost, which is 100%, minus the scrap value, which is 5%, and I'm going to divide that by the useful economic life, which in this case is 5 years. So I'm just dividing by 5. So I'll have 100 minus the 5, and then I'm dividing by 5. So I know straight away my rate of depreciation is 19%. Now a full year's depreciation in the year of acquisition and none in the year of disposal, that's going to be important when I start looking at the disposal during the year. Okay, so during the year, a delivery van which had cost 40,000 in 2019 was traded in for 10,000 against a new delivery van. So this is fairly standard. You have your 6 steps as you go through this. Okay, so you'd start off and you'd have your T accounts. So you have your delivery vans, you're going to have your depreciation, and you're going to have your disposal account. So nothing has changed there. It's the same process on those. We're going to have our depreciation on disposal, and then we're going to have our depreciation for the year. And where was that check for the net amount? Treated as a purchase of trading stock. So that's where it went in. Okay, so we're going to have to adjust that purchases figure. So let's make a start on this. So your delivery vans. Now remember, delivery vans are an asset. So we put in our A, our plus and our minus. We have our depreciation. Treated like a liability. It's not strictly a liability, but it's going to reduce an asset. So it gets that treatment. And then our disposal account. We don't know if we've made a profit or a loss yet. So we put in our opening balance. So you'd go back to your question, check what your opening balance on delivery vans was. So we'd come in here, opening balance 115,000. your depreciation, sorry, not your depreciation, your opening balance on depreciation, I should say. Again, go back and quick check here so you can see your opening balance on depreciation. It's going to be that 115 minus the 80,000, okay, minus the net book value. So 115 minus the 80,000, so 35. You know you're going to have your P&L charge for the year, you know you're going to have your disposal figure, and you know you're going to have your closing balance. Here, you know you're going to have your disposal, you're going to have your trade-in or your allowance, okay, and then you're going to have that bank figure, and finally you're going to have the closing balance. Okay, so you're used to that setup. So the things we need to watch out for: your disposal, your delivery van, which had cost 40,000 in 2019. So that's what you've gotten rid of. So 40,000 going in there into your account. Now what did you get instead of it? So you're coming along and you're saying, right, trade-in of 10,000 against a new delivery van costing 56. So 10,000 here of a trade-in, and the new van in total costs 56, so 46,000 there. And straight away, you know that your purchases are going to be down 46,000 to check for the net amount. All right. Now, these are the ones that we're keeping an eye on here. So your depreciation on disposal, then what's happening here? So you got it in 2019. You had it for 2020. You had it for 2021. Had it for 2022. In 2023, you got rid of that asset. Now just watch your policy. That's what you need to keep an eye on, okay? So it is telling us here that there's a full year's depreciation in the year of acquisition, and then none in the year of disposal. So what that means is in 2019, full year, the full 12 months. Then you had it for a full 36 months, and then nothing in 2023. So the year you got rid of that asset, you're not going to charge anything. So you're coming along here and you're saying you got rid of it during 2023. You don't have the dates, okay? So there'll be no charge for 2023. You've already worked out that it's at 19%. So you're coming along, you're taking your 40,000 euro. It's at 19%. And it's for the full 48 months. And all you do is just get that final figure, 40,000 at 19% by 48 over 12 or multiplied by 4, whichever you find easier. Okay, so that's your 30,040, and that's your charge here. 30,400, sorry. And then you're coming along and you're getting your P&L charge for the year. And I think this is where the problem can arise sometimes. So your depreciation, so there is no depreciation in the year that you sell the asset or you dispose of the asset, but there's a full year's depreciation in the year of acquisition. So the 115 plus the 10 plus the 46 minus the 40,000, your new balance is 131,000. Okay, so your depreciation for the year then, all right, that 115 is going to be depreciated, but the 40,000 is going to be taken out of it. The full 56 has to be depreciated. So if you think about it, you're saying 115 plus the 10,000 plus the 46 and get rid of that 40. That's not going to be depreciated because it doesn't get depreciation in the year of disposal. So the 131,000 at 19%. So that's your charge for the year. So 24890. And then you just get your total for your accumulated depreciation, 29490. And then finally, just to finish it off, from your delivery vans, you have 40,000. You have your depreciation from your disposal account, 30,400, and you did get a trade-in on it. So a trade-in of 10,000. So So you've actually made a profit there, so P&L of 400. All right. Now, remember, you're doing a question 1 here, so that's going to go in as operating income. So you have operating income here, and then the 131, tangible fixed asset, accumulated depreciation, and then because it's a delivery van, selling and distribution for your charges there. So they're just marked off, and you've already dealt with your purchases figure. Okay, that's going to be adjusted. Okay, so if it says full year's depreciation in the year of acquisition but none in the year of disposal, it is going to be your closing balance here that's going to be depreciated. All right. Watch out when you're looking at the assets you've disposed of. So you have 2019 full year's depreciation, 2020, 2021, 2022 full year's depreciation, and then nothing in the year you got rid of it. So in 2023 you've no depreciation at all, and that's the way you approach that every single time. So what I would have in my little flashcard is, if it's year of acquisition, none in year of disposal, it's going to be that closing balance, the 131, that I'm going to calculate my depreciation on. I would also keep an eye on being able to calculate that rate of depreciation. That's really important that we can do that as well. Okay, so that's the first one there that we want to take a look at.